Morning everyone. Morning, good evening everyone. Hope we're all good today. So the crypto ball turned out to be nothing really. As we talked about yesterday, we were expecting price to come down into this zone and take the liquidity, and the perfect narrative would be, if nothing was said in the ball, then it's an easy sell off into there. But that's what we were expecting anyway, with the longs opening up. So now we've tapped this level. I was expecting to hit this level and start moving up, but as you can see, there's still people opening up longs at the price of 84,500. There is 550 million and 450 million at 84,600. So this is such a huge spike. You know, if you look at compared to the others, in the last 7 days we've got 1.3 million going long, but if we just got price down to 84,000, we would take over $1 billion just in that small move there. So just like we've had in the last 2 weeks, people have opened up longs again. So I think even though price has come down and hit our liquidity and we're expecting to move up, people have opened up longs again, and price is most likely going to come down and take them again. But we need to see some action from Bitcoin here, if I'm honest. You know, we've got the trend line up here, which is good, and we had the parallel, but this parallel's now almost turned into the wedge. So we need to see this breakout, and if I jump onto the weekly, you can see the stochastic RSI has now come to the bottom. When this comes to the bottom and it prints a wee green symbol, that means there's been a crossover, and that crossover tends to be bullish because you get the bigger move up. There can be fake outs, you know, if you look down here there is some fake outs, but it should be starting to make its way. So I believe this would, the crossover to happen, and on the daily for the breakout to happen, it would make sense for the crossover and the push up to take this liquidity. Now for some hopium as well, the global money index. Now for anyone that doesn't know this, this is basically the global liquidity, and Bitcoin, it just happens to track it relatively well. So you can see the more money, let me see if I can line this up a little bit. Money in the globe, this is basically all countries in the world that are printing and removing money from the economy. So overall, is there an increase in global liquidity, or is there a decrease in global liquidity? And as you can see, Bitcoin follows global liquidity quite well. Now, this is offset by 11 months. So if I just take this to 0, you can see, okay, global liquidity's gone up. Why hasn't Bitcoin followed it? Because it takes time for it to run through the system. And it's roughly, say, 75 days. Offset. So once it starts moving up, 75 days, very roughly, Bitcoin starts moving up. So if we put this offset back in, and then we marry it up a little bit, make sure it's a little bit tidier, you can see it starts moving up, and when it moves down, Bitcoin moves down. Now, what do we notice here? We've got the downward trend in global liquidity, and what's happened here? Bitcoin's gone down. But look what's happened. Because we are sending this as an offset, we can actually see in the future, so how this global liquidity will affect price direction. And as soon as global liquidity starts moving up again, it just happens to be at the point of this wedge. So I was following this parallel down. This was my main pattern to follow, but it's quite bearish right now. So I just thought I'm going to put on the global liquidity index, and it marries up just to show you guys liquidity's already, this has already started injecting in. So this liquidity started injecting into the system back in January. So January they started pumping liquidity in, but we won't feel the effect of it in the Bitcoin price until end of March. That's when it starts moving up. So if we can combine this with the wedges coming into here and is due to break out just as liquidity should start coming into the Bitcoin price and affecting it, this is a very good sign as well. We've got very bearish sentiment right now. Everyone's super bearish. But we've got the Dixie dumping hard. So we called the head and shoulders, it was a breakdown, now it's starting to follow this measured move. So Bitcoin moving, it's already gone halfway down this range and the move hasn't played out yet. So we've got a lag from this dollar breaking down that should be loading into Bitcoin soon. We've got the global liquidity saying at some point very soon we should start feeling the effect of the global liquidity that started in January. And when that effect starts in, we should be coming to the point of this range. So it's all very, very bearish right now. But there is a huge wave of liquidity getting injected into the economy. It's been injected, should I say, and it got injected in January. We just have to wait 3 months until it starts coming into the Bitcoin price, until we start seeing it. It's almost like, you know, when there's an earthquake in the middle of the ocean and you get the sudden doom, but it takes a couple of hours or whatever for the wave to start moving in before it hits land. So in January the earthquake happened and this wave of liquidity is going to be coming in around about the end of March. So if we can just hold off right now, and this liquidity will start coming in and this should start moving up price because these run with each other. But we need price to hold up for now. We need to just keep this in this wedge. Maybe retest, and maybe it'll run. Maybe it's just going to range now. And then during this would make sense. Because long, everyone keeps on opening up, betting the market's going to go up. Maybe it's just going to keep on ranging. So these long liquidations, these longs just keep on getting liquidated and they eventually give up around about the time global liquidity enters Bitcoin. And then we see the move up. So this move, we're about to see a big move because this is the main trend line of Bitcoin. And this breaks by the end of March. And also, if I remember correctly, the 5th year of the decade is a very, so on average, like 1925, 1935, 1945, if you average them all together, the 5th year of the decade is the biggest moving year on average. And we usually have a pullback from January to March, and then March is normally when it goes off. So we've got historically the 5th year of the decade on average is very bullish starting from March, and we've got global liquidity should be entering the Bitcoin price around about March. We've got this wedge here that is forming that has to break by the end of March. And we've got everyone very, very, very bearish. But as you can see, everyone is very bearish, but Bitcoin is making higher prices, higher lows, which is which is a good thing. We just need price to keep on ranging within here, and then liquidity should come in and send it off. Now if we look into our rolling 30-day liquidation map, we also see, so we've got global index, we've got the average of the 5th here, and we've got the wedge coming to a point. We also have a huge skew of people going short, and that's around about $4 billion worth of shorts in the last 30 days against 1.85, so it's over 2 to 1. So along with all these factors that are bullish, we also have all the liquidity that is everyone's betting on shorts for price to go down. So that is the short squeeze. We've got the makings of the short squeeze here. And we look up here on the 3-day, we can see some targets here for the liquidity, for price to move to take that liquidity. We've got a strong one up there at 95. So let me just have that. So we've got the price to move up, we've got the short squeeze in play, and we've got multiple factors telling us this is going to be going on. And we've got sentiment very, very bearish right now. So we just need to keep our eye on it, and we will track this. I wonder if price will get a wee bit boring, maybe fake it out down here and then send off. But we don't really want any closes below here. Any strong, continuous closes. We want it to hold that high, or maybe if it just fakes out and sends. I don't mind a fake out. That always, when I see a fake out, it just makes me so much more bullish because I know the fake outs happen. So, it's tried to throw you left, but it's going right. So we just want to hold this wedge now until global liquidity comes in, and once that wave hits us, that should send price up. I do these updates every single day. I like to break down the charts, the liquidations, technical analysis and the market data, and piece it all together in hopefully an easy to understand way. If you like this, guys, I put them out every day, so please subscribe, hit a like on the video. Let me know how you guys are feeling. Are you bearish or are you bullish right now? Because from my feel, I don't have any social media. So one of the good reasons why I don't like to have social media is I basically avoid the day-to-day fluctuations of the bearish bullish vibe. But when it gets very bullish or very bearish in sentiment, because I have no social media, if I hear about it, then it's already kind of getting at the extremes. So we've got everyone panicking, but we're making higher highs. So this is one of the times when I've talked about this before in the market. Price has not broke down in this trend, but you're very entitled to feel very bearish. You're in here. This is why the market's, it's the way it's designed. It's to chew you up. You're absolutely entitled to feel bearish here, but until we get technical breakdowns, you don't sell, because that is just an emotion that you're feeling. You're just feeling that emotion of, oh, price is going to go down, I could lose this. That's fine. Accept the feeling, register it, you're totally entitled to do it. But you don't sell until you see breakdown on price. And this big trend line here is a very important trend line. And if it hasn't broken down, it's bullish. And we keep riding this trend up until we see breakdowns. So that's it, guys. Not much more to add. I hope you're having a good weekend, a good Saturday night, and I'll be same time again tomorrow. Cheers, guys.